Hello from Trend Signal for a review of the data and events the week beginning the 26th of November 2018. The last week in November starts following a shortened week, certainly in the US last week, with Thanksgiving and the dreaded Black Friday. We're now in the midst of Cyber Monday. So let's have a look at the calendar over the weekend. The Brexit deal has now been ratified at the EU Economic Summit yesterday. Now the hard, if not impossible, task facing Theresa May of convincing Brexiteers and Remainers alike that this is the only and best deal available. Certainly the tea leaves don't look good on this one, but the market remains, or the markets, I should say, remain calm, at least for now. Last week, equities, certainly US equities, took a right old hammering. Dow Jones lost 1,100 points, about 4.45%. S&P 500, 104 points, 3.8%. European markets fared quite a bit better. FTSE was only down 61, but that's sort of been jerked in either direction by Brexit, obviously. And DAX, 148 points, or down 1.3%. And the Nikkei, pretty much unchanged on the week. The story, global equities or US equities really hit by the tech sector sell-off. We've mentioned before that the FANGs, Facebook, Apple, Amazon, Netflix, Google have lost over $1 trillion since the start of October. The reasons: lofty valuations, overly optimistic growth forecasts, lack of progress on the US-China trade war, etc., etc. Whichever way you read it, there's been quite a lot of bloodletting there, with the likes of Amazon having been above $2,000 a share, now nearer sort of $1,550, $1,580 a share. Likewise, Apple, $230 a share, I think, if I get my numbers right, back down to around sort of $175, $180 a share. So that's some fall. Not a penny stock. These are the two biggest companies in the world and were valued at $1 trillion apiece. Dollar pretty much unchanged last week. Sterling, again, obviously, dealt its hand by the Brexit angst, really, and will continue to react accordingly. Certainly, it looks like the attention at the end of November, so beginning of December, next Monday, the markets will start to focus on the Federal Reserve, who are expected to raise rates at their meeting on December the 19th. And oil was a very big headline last week. Market was wrong-footed in October when Trump exempted China and India, to name a few, from the Iran oil sanctions. Shale oil production continues to be pumped at record levels, and Trump continues to exert pressure on the Saudis to maintain production levels. So put all that into melting pot, and you have this substantial fall in crude since the beginning of October. Probably sounding a few alarm bells with OPEC and non-OPEC members alike, but for now, the price remains under pressure, albeit a little rebound happening on Monday morning. So data and events this week, G20 at the end of this week, and all the machinations of the Brexit deal going on. We start with Mario Draghi, who is speaking. He starts the ball rolling with his testimony about the economy and monetary policy before the European Parliament. The Eurozone bloc has slowed in the past two quarters. The ECB are intent on ending QE in December. Any news out of that would be quite interesting. Mark Carney talking at a book launch. Surely he can't put his foot in it there. Some of the Brexiteers refer to him as the arch Remainer. Probably true, actually. US consumer confidence on Tuesday. Will investors be taking a bit of a knock from the recent slump in US equities? I've no doubt that will affect confidence, and we're predicting, or the market is predicting, a fall to 136.2, still a very high confidence reading on its own anyway. Reserve Bank of New Zealand, their financial stability report will likely impact New Zealand dollar pairs. Wednesday, we have the release of the bank stress test. This is from the Bank of England. They tell us which banks have passed, which ones have failed, and which ones need to raise new capital, etc., etc. Unlikely to cause much of a stir, maybe with the odd bank stock, obviously. It could do. And then we have the prelim reading of the GDP, gross domestic product, the value of goods and services produced in the third quarter in the United States. We've had the advanced number. This is now called the prelim number, the second of three numbers. We're expecting a modest uptick to 3.6% from 3.5, not the 4.2 that we had in Q2. Still quite a strong number, unlikely to have too much of an impact because it is a bit of a backward-looking number. Fed Chair Powell, or Jerome Powell, due to deliver a speech entitled "The Federal Reserve's Framework for Monitoring Financial Stability." Not the most catchy of titles, but maybe a feast for compliance officers, but unlikely to affect the markets too much. Thursday, we then have the start of the G20 meeting in Argentina, the top 20 industrialized economies globally will be meeting in Argentina. First-class hotels, first-class flights there. The cynics amongst us would say that there's just one big talking shop, which it is. The markets will be keen to see some warming in the relationship between the US and China, and some sort of progress perhaps made on resolving the trade war. And it is noted that Donald Trump and Xi Jinping are planning to meet on the sidelines of the conference on Thursday the 30th and December the 1st, which is I think Saturday actually. I think Thursday, it's December the 30th is in fact Friday. I apologize. We then have Mario Draghi speaking again on Thursday, speaking at the Global Research Forum on International Macroeconomics and Finance in Frankfurt. There's another one for the... Actually, this could provide some sparks for the markets, to be fair. So, yeah, that has the possibility to impact the markets. We finished with the main key, the last key sort of event, which is the FOMC minutes. This is the minutes that of the meeting that was held about 3 weeks ago. Important feedback, really, on Fed thinking. Will the recent market angst be minuted? Did they talk about it in the last meeting? And if so, how will that affect their thinking? It's possible, according to the Financial Times, that the Fed could go pause in December. Of course, that would affect the dollar and help equities, but for the time being, it still looks unlikely. But obviously, the FOMC minutes released on Thursday evening this week could definitely impact equities, the dollar, and bonds. That's it. Thank you very much for listening. All the best. Bye for now.